Alrighty, traders, good afternoon, good morning, good evening, and welcome to the pre-Fed decision coming out at 2 p.m. Eastern Standard Time. Trust everyone is having a fantastic week so far, and I know that the market's a little stalled right now based on what is going to happen at 2 p.m. today. Are the Feds going to go ahead and hike, or are they going to pause? Now, why would they pause if they've already said they're going to go ahead and raise the rates 25 basis points? In fact, they said they're going to raise the rates here in March, April, and in May. What is the reason why they would possibly pause? Well, based on the banking crisis that's taking place right now, we all know about, yes, it is the Silicon Valley Bank. So with Silicon Valley Bank going down and other banks like Signature Bank, with all these bank crises taking place at the moment right now, this is the reason why we believe that the Feds could pause coming out at 2 o'clock today. How's that going to affect the market? We'll dive into that in a minute. So if they pause due to the fact that they know that it's putting more pressure on the banks, and I'm talking about huge banks, all right. If they're putting pressure on the banks by raising rates because they have gone ahead and capped themselves with a treasury bond that's not giving them the yield that they expected over the 4 years because they didn't anticipate these hikes to be so aggressive over the last year, because we've gone from 1% last year, same time last year, to approximately 1%, to right now going on to 5% if they raise the rates 25 basis points today. We're at 4.75 at the moment. So with those things taking place right now, if they continue to raise rates, it's going to create bigger problems in the banking in the banking sector. Now, if they pause, what is going to be the comment coming out in the statement? We believe that the statement is going to state something like this. Well, we're going to go ahead and pause, and if the banking crisis resolves its issue, we will continue to raise rates, because the biggest thing that they're fighting right now, that the Feds are trying to combat, is inflation, right? And in order to be able to combat inflation, they've got to continue to raise rates until inflation starts dropping. Now, they've seen a little bit of downside move in inflation, which means what they're doing is somewhat working. But what we are not thinking about is, of course, what's causing inflation? What's creating the biggest problem with inflation? Well, oil pricing. Now, we're going to take a look at oil price. We're expecting oil prices to start shooting up in the summer. And let's not forget about diesel, right? If you actually see the price of diesel, which, by the way, is what most transport companies use in order to be able to get goods and food to your house. In order to get food and goods moved around the world, it takes diesel. And we know that there's a shortage in the reserve in diesel. In fact, it is demising by the day. There's a huge shortage with diesel. In fact, in our reserves, diesel reserves, there's a huge shortage, which means come summer, what's going to happen when we run out of diesel? What's going to happen with inflation then? I mean, we're just focusing on raising rates, but is that really the big issue? Well, let's stick to what's going on today. Let's not go too far into the year, but let's stick on to what's going on today. Interest rates. If they raise interest rates, what would that look like from a technical perspective? Because a lot of the times traders, we're technical traders. It takes a lot to be a fundamental trader. It takes a lot to know what's going on and have your sort of ears to the ground as to what's going on behind closed doors with banks, with the Feds, and all the stuff, the housing market, all that stuff. You got to know all that stuff in order to be able to really understand what's going on with fundamentals. And also, fundamentals can be somewhat tricky because you're anticipating something when the news comes out, but the market reacts differently, all right? And that's because people react differently to the market as well. And so let's go take a quick look and see, what does the technicals look like when we're looking at these type of setups. So let's dive into it right here. And once again, good morning, everyone. Good to have everyone here. So let's look at the technicals, because that's really where I go ahead and make my decisions on. And want to make sure that everyone understands that not only do I look at the market from a technical perspective, but I also go ahead and assess the alternative. So if I'm expecting the market to do something and it does something different, then I call that the alternative, which means I have a backup plan. I need to obviously pay attention to that as well. So as we go ahead and as we take a look at the dollar index right here, we'll notice that there was a sort of a setup that was developing that we were monitoring. And this is this inside structure. If you look over here, we had, and let me change the color right here. We had an inside structure that was moving. Let me get something more brighter. We had an inside structure moving here in a wave 1, 2, 3, 4, and 5. When we got down to this level right here, we did anticipate some dollar strength. But as the market goes ahead and targets that fourth wave right here, we expected a sell-off. The question here is, we know that if the market is in a corrective pattern, it can move in different structures. One of the structures that the market can move in is called what we like to call a irregular flat. Hold on a second. I'm making my there we go. It's called a irregular flat, or it could even be a zigzag. And so this is the thing. Zigzags appear this way. Goes 1, 2, 3. Now, sometimes in a corrective move, we can also see a fifth wave if we're looking at possibly a reversal taking place. So if that's the case right here, this will be 1, 2, 3. This will be 4, and this will be 5 up here. Now, what is the signs that we look for that gives us an indication that the market is possibly just in a zigzag and that it's going to start working its way down, which means that we're going to be looking for a 5-wave structure working its way down here. Because if this is our 1, 2, 3 pullback, our correction move, then this means that we should be heading into a 5-wave downward structure. So the things we look for is typically how the market deals with the previous high right here. And as you can see right here, and let me zoom in a little closer so everyone can see this a little bit more clearer. Let me go ahead and zoom in here so I can get a nice little, so you can get a nice little look on this. Here it is here. So this is the level right here. Oopsie, what is going on? Yeah. Oh, I signed up for that. This is the level right here that price is currently trading right now. Now we did trade slightly below it. That doesn't really necessarily mean that we've broken, all right? That we're heading south. It just means that we've traded below. But if I look at this inside structure, look at this right here. We got a crown pattern setting up right here, where price goes ahead and retraces not quite to the right tip there, and then drops back south. If we see the dollar, this is something that's key today. If the news comes out and we see the dollar start rallying north, traders, I believe this is going to be a short-term rally, all right? Call it a midterm if you want it, but it's definitely not long-term. Long-term, I see the dollar still bearish. It's going to be a short-term rally, and we're going to see the market coming back all the way back up here to this level right here before we start seeing another sell-off. So it's going to be a short-term, midterm rally on the dollar. But what's key is how today closes out. A lot of traders look at the news and try to find the news based on the movement at the moment that news comes out, to try to define where the dollar's going. You cannot do that because fundamental news is really long-term outlooks, right? It's short-term volatility, but it's long-term outlooks, which means when I say that, it means that when you go to a larger time frame, you can really see where the turning points are going to be, all right, for the market. And so this volatility we're seeing today is just setting up for the next opportunity as to whether the dollar is going to be bullish or bearish for the next few weeks. And so we're looking at the dollar right now, and this is what we're going to anticipate, right? We're going to go ahead and pull up a smaller time frame. I'm going to go down to the smaller time frame. This is the 4-hour right here. It's small enough. And if I look over here, this is the swing that we're currently holding in. It's a downward swing, and this is why we are paying attention to this low right here, where the market's currently trading just slightly below. If we break above here, this is what we call as a irregular flat. It's an irregular flat, which is a corrective pattern, and keep them and note the term corrective pattern because that's what it is. And so a corrective pattern would see the market doing something like this, come back up here, go back up here to take out the high, go to a deeper retracement. This would be the sell zone right here for price then to start working its way back down. I would personally like to see the market continue to push back off this resistance and head further down south. But traders, that's what I want, but it comes down to what the market's going to decide on doing. And I know that the alternative isn't such a bad idea, all right? Because I know that overall the market will still be bearish on the dollar. So what I have to do, how can I prepare for what could happen if the alternative kicks in? Well, traders, this starts off right from the beginning. Whenever you're looking at trades, if you've gone in and implemented trades already, and let's say you're short the dollar, it means that you got to make sure that right in the beginning, you're managing your risk correctly, right? You've got to manage that risk correctly from the beginning. It's not time after the fact now to go ahead and scramble and try and make adjustments to your risk management, all right? You should have done that in the beginning. Now, what we can do is this. We can hold off from getting into any more positions and going ahead and deciding, again, this, if that's your strategy. It may not be my strategy. It may not be your strategy. It may not be Jack's strategy. It might be Paul's strategy or Jill's strategy or Janet's strategy. It could be someone else's strategy. But the strategy to be able to, if you didn't work out your risk management right in the beginning, then you may have the option to say, hey, I'm loaded on this trade on a sell. If price breaks above you, maybe I should give it a little more time before I add any more positions on, give it a little bit more time, and then right here is the time to go ahead and start selling. So which means that all additional trades in this area might be off the table if you did not manage your risk correctly and you're looking to like, hey, listen, I've got to let the markets move a little bit. Then what you'll do is you'll look for the next turning point. Again, I'm not suggesting anything. I'm not suggesting this is what you're going to do. I'm just saying that if it was me and I was a little tight on margin and I had to go ahead and make some adjustments, that's something I might go ahead and do. All right. If that was part of my strategy right from the beginning. All right. Remember, don't go ahead and change the plan while you're in the trade. Stick to your plan throughout the process. All right. We're talking about someone that's just trying to position trade and put themselves into positions on this setup. Now, one particular trade that I'm currently holding on right now that and I'm short dollar is the US dollar CAD position right here. And so I'm looking at this right here, and I'm going to go to a daily time frame first. And if you look on the daily right here, I see that we have this consolidation right there. All right. We have this big swing going down right here, and the market's come back, and we see it's come back in a nice little zigzag pattern right here. It's holding above, below that level of resistance right here. And the one thing that's going to be important for me is to look to see if price can get back below that 1.3700 level right about there. If we can get below that, then that means that this move that we're seeing right here is just simply that correction move, and that the CAD, the US dollar CAD, is going to go back down to the bottom right here and possibly even chase after the target down here at 127 and change. So we could go even further down south on the US dollar CAD. Again, anticipating the dollar to be weakened. Now, going to the US dollar CAD right here, I'm going to look at a couple of things here on the 4-hour time frame. Firstly, number one, if I go ahead and pull up a trend line, and I'm going to go from a trend line all the way up here, and then I'm going to go ahead here and inside, look at this inside trend line, just look in the short term right here. There's an inside trend line as well. So we can see that what's going on right here is that, number one, notice with the 4-hour, we've got a 200 EMA down here. That's priced at around about 35.72. It could go a little bit up, but 35.80 is a very attractive level that price can draw itself back down to. The thing that we have been struggling to break below is this level right here at around about 36.50. So if we start seeing strong, weaker dollar, and we drop below 3,700, the key level for us to break below is 36.50. A break of 36.50 will send this pair down south towards a target of at least, and I'm going to go ahead and throw up a couple of targets right here, at least the 200 EMA, which is trading at 35.75, and then on its way down to this level of support and the 1.618, which is priced around about that 35.20 level right about there. And that, traders, is all you really need to focus on right now in the short term. Again, if price goes up, let's look at the alternative. If price goes up and we start seeing price going back up again, I don't think we have enough to go bullish. I think we're going to start holding short. But what I'm going to do is, traders, I'm going to follow a sort of a ritual I follow most of the time, and that is I prepare for the worst. What does that mean? I make sure that I've got proper equity management to be able to ride the waves out. Number two, I expect the best. What does that mean? That means, traders, I look at my charts, I read into the charts as to what it's telling me, and then I look at only what I'm expecting it to do, and if the alternative appears, then I will deal with that then. Right now, my focus is on the dollar, US dollar CAD, continues to move in this downside move, and we're chasing after that 35.15 level. All right. Again, certain levels like 35.80 is key. 36.50 is key, and then of course down here 35.90 or 35. What is that? 35.22 actually is I would say the bottom of the barrel that the market's going to go ahead and drop back down to, at least in this midterm move. Traders, I think it's going to be an absolutely killer trading day today. And don't forget, this is not the only rate decision that's coming out. We have another rate decision coming out on Thursday, and that is the Swiss National Bank. They expect to raise the rates 50 basis points. Is that going to shock the market? Well, we're going to have to wait and see. So with that being said, traders, hopefully this information has helped you a little bit in your technical analysis and gone ahead and given you a little bit of more insight as to what's going on with the Feds and whether or not they're going to be pausing or hiking this afternoon, and how that's going to affect the market. Well, we'll take a look at the technicals. And traders, remember something. Always remember, don't trade with the heart, but trade with the chart. Meaning, let's not get emotional about what we think the market's going to do and start running around and, like a chicken without a head, frantically trying to make adjustments before the news comes out. Let the news comes out. Let us look at the charts and let's make decisions based on what the chart is telling us and not what our emotions are doing. With that being said, it's FX Big Dog signing off.